The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Growth and income stocks. That's what we're going to hear about right now, at least a couple of them from the editor of our Income Investor Service here at Zacks, Brian Hamilton. You've got a couple of interesting ones here this time around. One is MDU Resources. That's a gas utility, right?
Yeah, they are technically considered a utility, but they're more than a utility company. They're basically set up in two different divisions, their utility division and their construction division.
Okay.
Now, in 2017, their utility division saw increases in sales in their electricity and their gas, and they also increased their client base as well. Management also recently announced that they're investing in a huge wind farm in North Dakota, and they laid 21 miles of new natural gas pipeline, which is expected to increase their production and their customer base throughout 2018.
Okay.
But the big story for this company is their construction segment. Now, 2017, they posted record revenues, and they posted record backlog orders for coming into 2018. Now, on their construction segment, essentially they do construction projects for other utility companies. They build high-tension wires, electric substations, and natural gas pipelines. Now, a big benefit for the company is the President's recent infrastructure bill. And this is going to be very helpful because all these new utilities need to be made, new substations, all these new pipelines. And so this is expected to be really strong for the company going forward. Management actually increased their 2018 EPS guidance on the high range, which caused analysts to increase their estimates as well. Okay. The company also pays a really solid 2.9% annual dividend, so we have some really solid growth with their backlog orders in the first half, and the second half is when their wind farms and their pipelines are supposed to go online, and then potentially a decade out of there with the infrastructure plan. So it's a nice steady growth company. They're expected to grow at about 6% year over year, and they're going to pay us a solid dividend at the same time.
Pretty comprehensive look at MDU Resources. And then the other is a computer technology company, Seagate.
Yeah, Seagate recently reported earnings where they beat the Zacks consensus earnings and revenue estimates for the second consecutive quarter, but the cloud has been a really big driver for the company as of late. And management currently expects cloud demand and ancillary products for the cloud to continue to be strong all the way through 2018 and into 2019. Management also has recently made two key investments. They've spent about $1.2 billion into Toshiba's hard disk drive segment. Now, management is hoping to gather about 15% more of the market share due to this investment. They also invested into Ripple. Now, Ripple is a cryptocurrency. They're really not going after the cryptocurrency. They're going after their ledgers and their blockchain structure, and this is going to help their data storage division as well. Now, because of the strength in cloud, management increased revenue expectations for next quarter well above what the analysts were expecting. Now, this caused analysts to increase their estimates not just for Q3, but for the next 2 quarters and the next 2 years for the company. And I want to show you how positive this is on their analyst estimate revision page here. Okay. As we can see here, over the last 60 days, we have unanimous agreements across the board, and in the last 30 days, increases in estimates. As we can see here, we have jumped up from 108 to 124, and we see similar increases for the next 2 quarters and a nice big boost for the next 2 years. At the same time, due to the strong demand in cloud and the earnings results, the company stock price has really appreciated as of late. As we can see here in their price consensus graph here, after the last 2 earnings estimates, we're seeing a really nice upward tick here. Now, this little pull down is the flash crash, as everybody got hit on that one, but importantly, we're seeing increases in annual estimates. Now, while they're expecting this increase in strong revenues and cloud growth, management also pays a huge 4.9% annual dividend yield as well. So we have a really strong growth story in the cloud, some really strong investments in other segments of their company, and a massive 4.9% annual dividend.
Interesting.
Yeah.
Do you own either of these?
No, I do not.
All right. Don't forget, check out more information on stocks and other stuff on our website, Zacks.com. All you need to do to start the adventure, as they say, is get on over to the homepage. With Brian, I'm Terry Ruffalo.